Now let's continue with this discussion for taxation of partnerships. We take an example, as you see it there. Unity Traders in a multi-business is a multi-business partnership of three brothers, Abel, Ben, and Charles. The partners share the profits and losses equally. The following is the income statement for the partnership business for the year ended 31st December 2018. Gross profit 14 million. Other incomes, profit on sale of machinery, then discount received, interest from Abel on overdue account, VAT refund, interest from bank savings. So all other incomes are given there. So remember, when we are doing taxation of partnership, we should know how to treat taxable incomes and non-taxable incomes. Okay, then expenses, we should know how to treat allowable expenses and disallowable expenses. Now, the expenses are there. That is salaries and wages, sundry expenses, office rent, medical expenses, depreciation, donations to a charity work, income tax, drawings by Ben, specific provision for bad debts, interest on capital, Abel, Ben, Charles, they are there, repairs and maintenance, then loan repayment. Now remember, because the method that we are going to use here is indirect method, whereby you are given the profit or loss by the end of the income statement, you'll be required to earn back all the disallowable expenses, and then we less the non-taxable incomes. So on that, you can see that question there. Now the question continues on the other page, whereby we are given net profit 5,861,000. Additional information: the office rent was paid to the partners who own the building. Salaries and wages include salaries paid to partners as follows: Abel, Charles, Ben. Number 3, half of medical expenses were incurred for the treatment of the partners and their families. Number 4, sundry expenses comprised the following: conference fees for purchase of land, settling customer disputes, general provision for bad debts, drafting tender documents, parking fines paid to county authority, drafting lease document, 90 years. Number 5, capital allowances were agreed with the Commissioner of Tax at shillings 284,000 required. Adjusted taxable profit or loss for the partnership for the year ended at 1st December 2018. Number 2 is a schedule showing the allocation of the adjusted profit or loss calculated in one above. So let me show you the question, where the question starts. The question starts from there. Unity Traders. That is where it starts. You are given gross profit. Then we earn other incomes are there. Expenses are given down there. So the total expenses comes to 11,821,600, and the gross profit comes to that. The additional information has been given. So let's use the solution. So obviously, what you do is that we get the reported profit of 5,861,000, which was given here. See this figure here? This was a profit, the accounting profit. In other words, this was the accounting profit. I believe you can see that. This is the accounting profit. So you earned back all the disallowable expenses. We know what disallowable expenses are. They are here. Salaries and wages to partners, they are all disallowable. You can see it has been earned back. Another disallowable expense which has been earned back is conveyance fees, settling customer disputes, general provisions for bad debts, parking fees paid to count operating, depreciation, income tax, drawings by Ben, interest on capital, then total disallowable expenses. You can see we are earning back all the disallowable expenses. And then we got 11,262,600. We also less non-taxable incomes. Remember, this is indirect method whereby you have been given the accounting profit. The accounting profit has been calculated at 5,861,000. So we earn back all the disallowable expenses, and then we less non-taxable incomes. So out of these incomes, which you can see here, you can see where my gross profit was. If you see my gross profit somewhere here, this gross profit, we entered all incomes here. But out of these incomes, there are those incomes which are non-taxable. So because in calculating accounting profit, we earned all the incomes and we less all expenses. So out of these incomes, we less those incomes which are non-taxable. That's why you can see here, we are saying less non-taxable incomes. VAT refund, profit on sale of machinery. If we less that, we are left with we continue. The other items that to be lessing is capital allowances that we agreed. You are told the capital allowances was agreed at 284,000. So adjusted taxable profit 9,116,600. So that is what we'll be sharing. Okay, then finally, analyze your distribution schedule. Analyze your distribution schedule. You can see salaries and wages, the way you have arranged them there. See up there, the adjusted taxable profit, the total 9,116,600, just as it appears above there, the adjusted one. Then salaries and salaries to the partners, they are arranged there. Interest on drawings, then interest on drawings for Abel was still there. Profit share, you can see how we share that. They were sharing their profits equally. Then that's a total business income. Then you earn other incomes. Rental income, see how we have shared it equally. And then if you earn downwards for each partner, you are able to get total taxable income. Total taxable income. So that is how we tax a partnership. Remember here, we have used an indirect method whereby the profit has been calculated. Remember, by calculating the profit or the accounting profit, we earned all the incomes and we less all the expenses. For the purpose of tax, we earned back all disallowable expenses. We earned back all the disallowable expenses, and then we less non-taxable incomes. I gave you a list of allowable expenses and disallowable expenses, taxable incomes and non-taxable incomes. So for you to tax partnership comfortably, you should first understand that concept, those items, those expenses which are allowable and those expenses which are disallowable. Understand incomes which are taxable and incomes which are non-taxable. Also understand how to prepare distribution schedule. So I just show you again where the question started. You can maybe pause your video and then you go through it slowly as you understand what you have done. Your question is there, Unity. You can start from Unity Traders, how the question was presented. You can see how the question was presented. Unity Traders. You can see how it was presented. You started, the gross profit had been given. We entered all other incomes, deducted all expenses. You can see the expenses, all the expenses. That is accounting profit. So what I'm showing you right now, what is appearing on the screen is accounting profit. The total, the final figure there will give you accounting profit or loss. But for the purpose of taxation, we earned back all disallowable expenses and back all disallowable expenses, and then you less non-taxable incomes. That's a question from page 150. This book is for CIFA as well as CPA, intermediate, appropriate for those levels, and also advanced taxation. You go to the other page, you get our net profit is there. Now that profit is the one that we are supposed to adjust for the purpose of tax. Is what we are supposed to adjust for the purpose of tax. You can see your additional information there up to number 5. Then you can see our workings. Our solution starts there. You can see starting the reported net profit which was given, and back any disallowable expenses. You know what disallowable expenses are, and back all the disallowable expenses to the reported profit. Then you less non-taxable incomes. You continue on the other side. The other item that you'll be lessing is capital allowances agreed. Capital allowances usually replace depreciation. So if you less that, you get adjusted taxable profit, 9,116,500. So what do you do with that? I showed you how to prepare distribution schedule in the other class. So it is out of that profit, that 9,116,600, that we paid salaries to the partners and also interest on capital. So whatever remain after that, you share equally, and then other incomes. In this question, the only other incomes is rental income. You share it appropriately, and then those figures downwards for each partner, and you'll be able to get total taxable income. It's simple as that. So that is it for taxation. For taxation of a partner or taxation of partnerships. Should I repeat? If you want me to repeat, I'll just repeat as it appears there. The question starts there. Unity traders. You are given gross profit. You are given other incomes. We deducted other expenses. We got profit of 5,861,000. Additional information is there. Required solution. With the solution, start with the reported net profit and back disallowable expenses. You must have a list of all disallowable expenses. You add back disallowable expenses. Then you less non-taxable incomes. And then you less capital allowances, you get your adjusted taxable profit. From there, prepare your distribution schedule. That is it. So we come to the end of that discussion. So in case you need any help, our numbers are there. You have my number there. The footnote of the book, 0727 87 1093. I'm the author and the publisher of that particular book. So if you need more materials for revision, for taxation, you call that number. You can help you to revise for your examination. That is our book. There are so many questions that you can see from that book. There are so many of them. So many questions concerning taxation. There are so many questions that you see from public finance and taxation from our book. Now this book you can contact us and we can send you a copy. We can tell you how to get the book. There are so many questions there for taxation of a partnership, including the format of how you prepare distribution schedule. You can see it there. A very good book. You can see it there. So it still have a list of allowable and disallowable expenses. The taxation of partnership starts here. Somewhere here. Taxation of partnership starts from there. You can see you are given items or expenses which are taxable or expenses which are disallowable, allowable expenses for partners and disallowable expenses. Then on the other side, we have a format for preparing partnership distribution schedule. An example follows there. An example follows there. An example follows there. Right, a lot of stuff for you. Good materials for taxation. Very good materials for taxation. So you can just contact us for any help. You can see my number there. The footnote 0727 87 1093. So if you need a class, online class, physical class, we are based in Thika town. So you need a class, physical class, you can just come. You can call me, I'll direct you where you get us. Online class, you just call us, we make an arrangement. If you want the books, you still call us, I'll tell you how to get the books. The book cover is this way. So this book is appropriate. That book is appropriate for students taking CPA, intermediate, CIFA, intermediate, ATD, also appropriate. Can also be used by those who are taking CPA and advanced, CPA and advanced level. Still appropriate for you. Public finance and taxation. Public finance and taxation. There are also other books that we sell or we have ordered, main books as they appear at the back, like financial accounting, professional ethics and governance, regulation of financial markets, economics, quantitative analysis, introduction to finance and investments, portfolio management, financial statements analysis, equity investments analysis, corporate finance, public finance and taxation. This book now we are discussing, leadership and management, fixed income investments analysis, alternative investments analysis, advanced portfolio management, derivatives analysis, financial modeling and data analytics. So we have so many books that can be of help to you. So that's a good discussion for the taxation of a partnership. My name is Mr. William, so we can meet again for more discussion. Thank you.